Hello Premium Hunters, and welcome to another episode of my weekly portfolio performance update. This is the update for week 12, which is March 17th through the 21st. I do have to apologize, this one's coming out a little bit late. I was traveling over the weekend, which is when I normally record these videos, but better late than never, and we're going to get it out there and go through the results anyway. My name is Andrew, and I'm consistently averaging over $5,000 per week with my options trading, and this is where I pull back the curtain to show you exactly what I do and how I do it. I post these update videos every week, typically on Mondays, a little bit late this week, but typically on Mondays I post these update videos, so if you're interested in following me on my trading journey, be sure to like, subscribe, and hit that notification bell. Just a quick disclaimer. I'm not a financial advisor. Please consult with a qualified financial advisor before making any investment decisions. So before we get started, I'd just like to share with you why I'm doing this. And the first reason, if you're new to options trading, I want you to know that it is legit. I'm giving you the ability to see real results from a real trader. I've been trading, as I said, I've been trading options for over 20 years. And I really love it. I really love the whole process of analyzing trades and being able to put the odds in your favor and generate consistent income through a relatively easy process. It's a steep learning curve, but once you learn it, it's a pretty easy process, and I love it. So that's my first reason. My second goal is just to build a community of people who are interested in options trading. Anyone from newbies who doesn't know what an option is to options experts, expert option traders who've been doing it a long time. And again, part of the reason why I want to build that community is because I love this whole process of trading options, and I'd love to be able to share my thoughts and ideas with anybody else who shares that same love or interest for this area of trading. All right, with that out of the way, let me just cover what to expect. What I'm going to do today is I'll cover all of my strategies for the previous week, which was week 12. I'll go over the goal for each one of those strategies, the profit and loss that I had for each one, and then do a little performance analysis for all of those trades for the week. I'll do an overall performance analysis, the total weekly performance compared to previous weeks, just to see how I'm progressing throughout the year. And then from that analysis, I'll give you any insights that I have from my trading from the week. Now, I always give a little recap about the trades that I've been doing throughout the year from week to week, and I do that using this table. You can see each week how much I have profited or lost, and you can also see my total profit for the year, and this is up through week 11. So last week I totaled $56,553 with an average of $5,141. And this week I'll show you what I did for week 12. Did I profit? Did I lose? Let's hop on in and find out. So for week 12, I did a total of 19 trades, and let's go ahead and jump over to my TradeZella platform, which is what I use to track my trades, and we'll take a look at all of those trades and see how I did. All right, so here we are in my trade tracking platform, which is called TradeZella. One of the things that I always encourage new options traders to do is track your trades. There's no way to know how you're performing with your options trades, especially if you're doing multiple strategies, if you're not tracking your performance. TradeZella is my platform of choice because of the flexibility of being able to track the different trades and being able to track the different strategies and easily filter by trade type or date range and just quickly do an analysis of how you're performing throughout the weeks and the months and throughout the entire year. If you like what you see with TradeZella, I do have an affiliate link down in the description. I do encourage you to sign up through that affiliate link because it does help my channel. But I would be using TradeZella either way. I just really appreciate how it makes tracking my trades and seeing my performance so easy. So anyway, what you see now are all of my trades for week 12, and what I'm going to do is break down the strategies, break down the profit and loss to show you my performance for week 12. So I've only had two strategies that I traded in week 12, and that's because of the craziness that's going on in the world. I'm sure everybody that's watching the financial markets know that it has been tanking. It's been settling out over the last, week or so, and that has helped me. But when the market was tanking, what happens is volatility expands. Having expanded volatility affects the price of options, and that creates amazing opportunities for us as options traders for new trades that we're opening. But for trades that we already have open, if we open those trades at a lower level of volatility, then that creates some difficulties for us, because as premium sellers, our goal is to sell options at a higher price and then buy them back at a lower price. When volatility expands, so does the price of the option, which makes it more difficult for us to profit on those trades. Now, it may not be that we have to take a loss, but a lot of times what will happen at a minimum is that it will extend the duration of the trade, meaning that it will take longer to generate a profit from those trades. And the optimal scenario with options trading is that you get in and out quickly, meaning that we are using our capital efficiently and generating quick profits from that capital. So when our duration gets extended on these trades, that's going to affect our rate of return. But in any case, as long as I'm generating a profit, that's what really matters most. There are a lot of traders out there who are losing money that would love to have this problem of having reduced returns or taking longer to get those returns. But at the end of the day, I'm still making profits, so that's good. All right, so the first strategy that I traded was the poor man's covered call. And as you can see here, there were only 3 transactions, and the only underlying asset that I traded this poor man's covered call on was Palantir. But you can see over here that you can see the profits that I generated, both the gross profit and the net profit for each. And then up here you can see the cumulative net profit for all of the trades, which was $240.38. So let me go ahead and jump into one of these trades so that I can give you a little explanation about how this works. Okay, so the way a poor man's covered call works is that we first buy a leap option. A leap option is a long-term duration contract that we purchase. Now, I know that I often will tout how we never buy options, we always sell options, but I do use the keyword almost. There are some instances where we're okay with buying options. And one of those instances is using a leap option to control stock that we strongly believe is going to go up over the long term. So Palantir is one of those stocks that I do have a strong belief will go up over the long term. So what I did way back here, let me scroll back, the purple line is the leap option that I purchased, and you can see that it's a $42 strike price, and I bought it way back here in November 12th of 2024, and I've been holding it ever since. And I am showing a profit on that call option. The reason why we're okay with buying that long-term option is because it allows us to control that stock for a lower amount of capital. So it gives us leverage on that position. So I've been holding it all of this time, and since I am controlling this stock with these call options, why not go ahead and sell shorter term call options against that stock that I'm controlling? And that's what I've done here. As you can see, back on the 18th of March, I sold the 89 strike price call on Palantir, and it actually came pretty close to going in the money, and actually did go in the money shortly after this transaction closed out for a 50% profit. So I guess I got kind of lucky there, but I can always roll this short-term call option out into the future and collect more premium on it if I still want to hold on to this leap, if I think that Palantir is going to come back below the strike price, which that's just what stocks do, is they fluctuate up and down, up and down. And that's why I love options trading so much, is because it allows us to profit off of these fluctuations. But as you can see here, I sold this option to open with a 70-cent credit and then closed it out with a 24-cent debit, making the profit off of the difference, which equaled out to be an $89.46 profit after commissions and fees. All right, so the next strategy I did, which is the only other strategy I did, was the weekly wheel. And you can see here, if you've watched any of my previous videos, you know that the weekly wheel is my bread and butter. It's how I generate consistent income over time. And you can see here that I did a total of 16 weekly wheel trades for a total profit of $2,535.18. And if we look at the list of weekly wheel trades that I did, you can see that I did them in 3 underlying stocks: Google, Amazon, and Palantir. And so let's take a look at each one of those stocks to see how many and how much profit I generated on each. All right, so first one is Google. I did a total of 7 trades on Google for a total profit of $624.99. Next is Amazon, where I did a total of 4 trades for $848.68. And then the last one is Palantir. I did a total of 5 trades for a total cumulative P&L of $1,061.51. If you want to learn more about the weekly wheel and how I trade the weekly wheel to generate these consistent profits, check out my video called How to Print Money Using the Weekly Wheel, which is linked in the description below. And if you're brand new to options and none of this makes any sense to you and you need some basic concepts for how options work, check out my Demystifying Options, which is also linked in the description below. But I'm going to jump into a couple of these trades just to give you a quick idea of how they work. So let's start with this put that I traded on Palantir. So here we are on the stock chart for Palantir, and the green line represents the put that I sold. So as you can see here, it has a strike price of 81, and I sold this put on March 19th. And when I sold this put, the stock was trading for about $86 per share, and I sold 3 contracts for $1.76 per contract. And then it was just 2 days later where I closed out the position by buying those contracts back for 88 cents each, which enabled me to make a profit on the difference. Now, as long as this put stays out of the money the entire time, I get to keep the premium for the option that I sold. Now again, if you've watched my How to Print Money Using the Weekly Wheel video, you know that when I put on these trades, I also immediately put in a good to cancel order to close the trade at a 50% profit. And that's why this did not go the whole way through to expiration. And that's what I refer to as juicing the trade, because I can turn right around and put the trade on again, readjust my levels. And if the stock was to reverse at this point, I would have locked in that profit that would have escaped, that would have vanished because the stock ended up trading in the opposite direction. Now, that didn't happen here, but that's okay. I can still profit off of this by opening that position again. So as we can see here, I was able to profit $260.21 off of this trade. Now, if I go back to my list of trades, I can go ahead and open up one of these calls that I sold right here to show you how that works. Okay, so now we are in the stock chart of this trade where we can see that I sold a call at a 106 strike price back on March 17th. I collected 28 cents for that and then was able to buy it back for 14 cents, which is a 50% profit. Now, you might be thinking 28 cents, is that even worth it? Well, sure, it's income, why not? But why so little? And the answer to that is because this blue line represents the stock that I purchased when I sold the put at a 123 strike price, it went in the money and forced me to buy the stock at $123 per share. Now, because I've been selling puts, I sold a series of puts before I was called out on those puts and forced to buy the stock. And then I've been selling calls ever since I bought the stock. And because of that, I've been generating this income that has pushed the cost basis of my stock down from $123 per share, which is the purchase price, to $105.64 per share, which is the difference between my purchase price and all of the premium that I've collected since selling these calls and puts. However, when I sell a call, I have to be careful to sell my call at or around the cost basis of my stock, because if I sell the call below the cost basis in order to generate more income, and if the stock rallies and my option ends up going in the money and I'm forced to sell the stock at the strike price, I am going to be locking myself into a loss position, which means I'm going to end up reducing the amount of capital that I have. And that's something that I really don't want to do. I want to avoid at all costs, because it's the capital that allows us to generate the income that we're generating. The more capital we have, the more income we can generate. So I'd rather take a hit on the amount of income that I can generate off of these ongoing trades, so that I can preserve my capital. Preserving my capital is the number one priority. Generating income off of that capital is the number two priority. And that's part of the reason why my profits have reduced and have been suffering over the last couple of weeks, is because when the market started tanking, I was forced to buy shares. The market continued to tank. It limited the amount of premium that I could collect on these calls that I sold against the shares that I own. Plus, the other factor is the way our brokerage calculates the amount of buying power we have is determined by the overall value of our portfolio. And when the value of my portfolio is going down, because the value of the stocks that I own are going down, that's going to reduce my buying power, and it's limiting the amount of profits that I can generate from these trades. So my hope is that as we move forward, the market continues to settle out. My stocks will recover a bit, which gives me more buying power to allow me to generate more income. But again, at the end of the day, I'm still generating income, and I have to be thankful that I have that ability to do that. So as we can see on this particular trade, I opened the position by selling at 28-cent credit and then closed it with a 14-cent debit, which gave me an overall profit after commissions and fees of $38.22. All right, so if we take a look at how we did overall for the week, I did 19 trades with a total profit of $2,775.56. I had 100% win rate. I made a profit on every single trade that I opened. Yes, it is lower than my $5,000 weekly average, so I'm not thrilled about that, but I am thrilled about the fact that I'm still making profits. I know there's a lot of people out there in the financial markets that have lost a lot of money over the last few weeks. So for me to be able to continue to post profits, hey, I gotta be happy about that. I also like to take a look at this screen because it shows my daily profits throughout the week. So week 4, you can see that on Monday I did 10 trades for a total profit of $708. They were all winners. All of the trades for the entire week are winners. On Tuesday I did 7 trades for a total profit of $226. On Wednesday it was 4 trades for $861 in profit. Thursday was 4 trades for $466. And then $515 worth of profit out of 4 trades on Friday. So let's go ahead and switch back to the chart, or switch back to my slides to see how we did overall for the week and how it stacks up for the year. All right, just a quick recap of each one of the strategies, the number of trades, and the total profit from each. The poor man's covered call, I did 3 trades with a total profit of just over $240. The weekly wheel was 16 trades with a profit of just over $2,535, with a total of 19 trades for the week and a total profit of $2,775. All right, we put that into our table, rounded up to $2,776. Again, that's below the average. It's the second week in a row that I've been below the average, but I have to take things in perspective, a big picture view. The market has tanked. It has suffered a lot, some of the biggest losses that it's suffered in several years. So the fact that I'm still generating profits is a win in my book. But the total for the year right now, we've got $59,329, and the average has dropped below the $5,000 weekly that's my goal that I shoot for. So we're right now sitting at $4,944. I do have a couple of trades, a couple of strangles that I trade, and these generate bigger profits. So I expect to have one of those closing out this week, maybe 2. If not 2 this week, then it will be 1 this week and 1 next week, which will help bring my averages back up again, put me back on track. But I still need the markets to settle out. I still need my stocks to come up a bit so that I can have more capital to play with, which will allow me to generate more profits. But overall, I'm still happy. I'm still generating profits. I'm still generating income, which is better than what many people out there, many traders are dealing with. So anyway, that's it for this week's update. Thank you again for stopping by to check it out. And if you have any questions or comments, please write them in the comments section below. If you have any suggestions for the channel, or if you'd just like to talk about options trading and let me know how you're doing, what kind of strategies you're using, I'd love to hear from you. And again, be sure to hit that like, subscribe, and notification bell so that you'll be notified of future videos. And take care for now, and I look forward to more better options in the future. Bye-bye.